As we get started here in the corn market, we're about 1 to 2 cents lower across the board. We've got the July contract down 2 1/4 cents, 359.5. New crop December down 2 3/4. For the soybean market today, this is a market also that has got pressure of its own. July soybeans down 8. New crop November soybeans down 7 at 873 3/4. On that wheat market, and it is watching what's going on the wheat tour. The July Chicago wheat contract down 8 pennies at 427 1/4. July Kansas City wheat down 4 3/4 at 392 1/4. Let's check in with Todd Horwitz with Bubba Trading as he joins us now. Todd, there's certainly a lot of pressure to go around here in these grain markets here today.
John, good morning. There certainly is. It's like the relentless selling continues, and basically the strong hands are the funds, and they're pushing hard to try to break it. To me, it looks like they're trying to create a panic. To me, I think they're trying to create some forced liquidation so they can get out, and I don't know how successful they're going to be. I think that, again, when you look at the overall market, I mean, the news is not all that great when we look around, and there's some things that certainly could create a lot higher prices. So, again, right now, with the lack of buying interest, with the lack of volume, the funds have total control, and they're squeezing as hard as they can to try to get these things to break.
Todd, could there be anything on the horizon here that could change the mentality of the money movement?
I think there's a lot that's going to be out there. Again, the way I look at it, the shorts are pricing that there's never going to be a weather issue, that there's going to be plenty of supply, there's never going to be a deal done anywhere, and all these things are going to go away, and the markets are just going to continue to evaporate into zero. Versus, you know, we get one little event that creates a little bit of stir, a little bit of fear. We get one shortage somewhere, and all of a sudden, all these excess inventories dry up, and all of a sudden now we got a supply problem. You know, right now we don't have a supply problem, which is, I think, what they're banking on. But it takes one weather event, one issue that creates it, that wipes out the supply, and all of a sudden we've now got a shortage again, and you see a much bigger rally. And typically this is the type of action you would expect when a market is trying to find and make a bottom.
What's your thoughts over here in the crude oil market? It's trying to hover around that $64 level.
Well, I think this morning actually some pretty good action, and I think today made what we call another blow off to the upside. I would look for it to start to come lower again. I think we're still in what we call that backwardation formation, which is not bullish. It's a very bearish. December oil is $1.20 cheaper than June oil is, which is not correct. You know, it's not the right formation. To me, this is a little bit of fear being built in. I look for oil to go lower, and right now our next target obviously is 60. But I'm looking over, by the end of the year, I'm looking into the mid-50s to the low 50s before it's all said and done.
Todd, thanks a lot. Always good to check in with you. Todd Horwitz with Bubba Trading here with us. And when we come back, we'll be talking to Garth Summers, and he's the USDA market reporter in Des Moines, Iowa. We'll get a report from him next here on the Marketing Report.